to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries. As we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media, this is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Before we get into our intriguing content, let me remind you, within every market there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message. I do deliver it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it. And my guys are a little slow this morning. It's a Monday morning.
Quiet, numbskulls. I'm broadcasting.
Yeah, I knew that they were there somewhere. While I do have a great team, when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. 1990, and it is another day, Ron Siegel Radio, a day of celebration. We like to celebrate on Ron Siegel Radio every day here. So what are we celebrating today on this wonderful day? It is National Cherry Turnover Day. There's a lot of good information there. A lot of our country is not celebrating today. I also celebrate today is my bride's birthday, so that is an excitement within our family. I know that's not the whole world, but you know, something I wish my bride a happy birthday, and that's kind of a nicety
not
for this
celebrating
day.
Today. I also celebrate today is my bride's.
I'm gonna get that little twist off of there. Sorry about that. Little extracurricular vocals there. That is as we are connecting right to our Facebook live stream. If you haven't caught us there, Ron Siegel Radio on Facebook. We are live on Facebook Live each morning. Checking out the markets today. It's a very fascinating day in the markets when we watch what's going on. Dow Jones Industrial Average down 3 points, down 4 points as we're speaking. Oil, it is off $1.50 a barrel. We'll talk about that in a minute. And the 10-year Treasury off about almost 3 basis points, 2.17. So we'll chat about that a little bit more as the broadcast goes along as well. Whew, a lot of news to cover today. We go all the way back to the start of the weekend. Mayweather-McGregor fight. Holy cow, did you check that one out? Talk about financial impact. Mayweather claims that he's getting $350 million for that fight. Damn! Yeah, that's a heck of a payday.
More money, more money, more money.
Lot of money in that one. Pay-per-view. And it's fascinating to me when you watch some of these issues going on, these things going on where there. Mayweather, he was looking at the idea there in his scenario that he made a comment right after the fight. I was watching the ESPN interview with him right after the fight. I found it fascinating that with all that was going on for him, focusing on a fight, focusing on the job at hand, he knew that they had to wait a little while for the start of the fight because New York and California were having trouble with their pay-per-view feed. I found that fascinating that he would be up on top of that right then as that was going on. So it's kind of an interesting scenario to me. Then we look out and see a Friday evening, President Trump pardons Joe Arpaio, the sheriff. And you know, I find this fascinating. There's a very controversial pardon. I'm not sure any pardon is not controversial. It seems like they all have some sort of controversy within them. But this one here, another one of those interesting scenarios. Served 30 years as a law enforcement officer, plus another 24 years, I believe was the number, as sheriff in Maricopa County. That's Arizona. Now, think about that concept, that he served all those years, yet what they found was 2 weeks before an election, the Department of Justice files a case against him. Does that seem a little odd? Well, it did to almost everybody that's followed the story, that they found that to be odd, that it's not the norm that they would be doing that. Found that very fascinating. Whether you agree with it or not, there were a lot of issues in the case. It turns out that they had to do they set it up as a judge trial. Judge was appointed by President Clinton. They would not allow him a jury trial. That I found fascinating as well. The National Police Association, 40,000 comments from the National Center for Police Defense. They sent 40,000 notes about having this case dropped. I found that quite fascinating as well. Now, apparently the people of Maricopa County have had some issues with the sheriff there, but they reelected him so many times. That's very fascinating. There's a commentary that the judge should have recused himself from the case. It's going to be an interesting case, but again, I've not seen in my lifetime where too many pardons are without some sort of controversy, just another situation where there is one here. And then obviously the major news of the weekend, Hurricane Harvey. Wow. That is just unbelievable what's going on with our friends in Texas, Houston area, Corpus Christi area. They may end up getting, when it's all said and done, close to 50 inches of rain. That's about 4 years worth of rain here in Taxifornia, here in Southern California, is what they're looking at right there. That's a tremendous amount of rain there, obviously, and the people are really suffering. So we got to look at that one from a whole different situation. What will it affect? Because a lot of our nation's gas, not Taxifornia, we use our own, but a lot of the nation's gas goes through that Houston area, looking at probably 10 to 15 cents a gallon of gas increase. Now, I looked this morning, the national average, AAA 2.368 is a national average gasoline. California, we're at $3 a gallon. Pretty much right around the highest of the country. Hawaii's just a little bit higher. I did notice that South Carolina's gone up to 210, but even in the heart of the storm, 217.3 is the average for the state of Texas. Yes, $3 here in Taxifornia. Yeah, that's not a good sign. Oh. So there are a number of key refineries that are right there as well. There's already, some of them have already been closed down. It looks like there will be more of them closing down. We're going to see quite a bit of this effect of the business. Now, we look at it was about, I think Katrina was about a $49 billion impact on the insurance industry, saying that this one may be a little bit larger than that even. So there's a lot going on. 6 Texas refineries out of commission right now is what the latest news are. 17% of the nation's crude oil output comes from the Gulf of Mexico, with over 45% of the nation's oil refining capacity set along the Gulf Coast. A lot of the refineries, they shut down early just to make sure. They knew this was coming. That's some notification. There's going to be some inquiries as to why weren't more people evacuated from the area, knowing that we were going to have this kind of a storm. Now, they only had about 72 hours worth of notice, but 72 hours, yeah, there's like 6 million people in the region. That would have been hard to move 6 million people in 72 hours. But there's been other places this has happened before. Why did they not learn from these other places? In South Carolina, they went to zoned evacuations. So people would know that if you're in Zone A, you need to evacuate going in a specific direction. If you're in Zone B, you go another direction. Because they ended up having in the Katrina issue, what their situation was is everybody's trying to go the same direction, same time, and they ended up having massive traffic jams. People died in their cars. So whole different scenario. That you got to learn from these things, and apparently FEMA and the governor are on the same page. Houston's mayor, instead of saying, voluntary evacuations. He just said stay in place. And those people are paying the price for that right now. So that's a serious situation. It is a shame. We will watch that. We will have our thoughts and prayers out for our fellow citizens in Houston. I know Orange County has sent some rescue people out there. I know other parts of the country are doing the same. Wonderful thing about our country when we all fight like we saw in Berkeley. I mean, those people up there, they should be ashamed of themselves, the behavior that they have. But, that's Berkeley. That's just to be expected on a regular basis up there. The Antifa group up there, they're military people. And they're terrorists, the Antifa group. And I'm going to say that on and on. We'll talk more about that in the days and weeks to come. But that group of folks up there, they're just criminal thugs. And I thought the best scenario that I saw of all of these things, and you may or may not like it, but I know they had one gentleman, one individual. I shouldn't say gentleman because that would be misrepresentation. One individual decided to kick a tear gas canister, back at police recently. The man is now in jail, but he ended up getting shot with a rubber bullet right where guys don't want to be targeted. And apparently that kind of put him out of commission for a little bit. Glad to see that one. That didn't put him out forever, but at least he realizes that there are consequences for actions. We'll talk more about this when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Good morning, Robin. Good morning, Chad. Glad to see you both with us. Hope you had a great weekend. Don't disqualify yourself from home ownership. 52% of approved loans have a FICO score under 750. We'll talk about that. When to use a personal loan instead of a credit card? Millennials need to worry about these 4 things in addition to saving for retirement. We got all that and more. Remember, you can reach us anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel, and if you miss any part of our broadcast, Ron Siegel 1, Ron Siegel, the numeral 1 on YouTube. Nearly 7 million, over 7 million people have watched our replays there. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Did you know that banks and credit bureaus are rewarded financially if you have bad credit? And the worse your credit score is, the more money they can make off of you? How does that make you feel, knowing that banks are getting rich off of your hard-earned money? How does it make you feel, knowing that if a bank or a credit bureau makes a mistake on your credit report, they benefit from it and it hurts you? The Fair Credit Report Act of 1971 requires banks and credit bureaus to report only accurate information, and nearly 100% of all credit reports are inaccurate. If you're sick and tired of being broke and tired of being robbed by the banks, you owe it to yourself and to your family to call Rondi. Rondi is a FICO-certified credit professional and has helped thousands of people just like you get out of debt and establish great credit. Rondi's number is 855-608-1990. Again, that's 855-608-1990. Or visit creditsanitizer.com. Again, that website is creditsanitizer.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel radio partners. As one of the heroes, real estate agents will rebate part of their commission. Lending partners will give a credit at closing. The title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. In the Your Credit Matters segment today being brought to you by Gold Star Mortgage. When you are ready for that next mortgage, Gold Star has all the programs for you. What are we talking about? When to use a personal loan instead of credit card debt. That is the subject today. So we need to really understand what the different programs are. Ideally, all household expenses would be paid for cash, debit card. You just open a wallet, take out the required cash, and be done with it. The reality, few people have enough cash in their savings account for even minor emergencies, according to a recent survey. Only 37% of Americans have the savings necessary to pay for a $1,000 need. Without having the cash on hand necessary to pay for expenses, more and more of us are turning to credit cards and personal loans to fill the gap. The convenience and simplicity of these new solutions are undeniable, but if not used properly, the financial consequences can be disastrous. This begs the question, which option is better for your situation? Credit cards or personal loans? Well, when do you take out a loan? Not all forms of borrowing are created equal. In order to judge which is best for you, you got to understand the basic criteria to help us choose, to help you choose. Number one, convenience. The easier it is to access funds in an emergency, the less stress and hassle you have to deal with, allowing you to focus on the situation at hand. When Hurricane Katrina struck New Orleans, thousands saw their homes destroyed. Easy access to emergency funding had a huge impact on how easy or difficult it was to get through the crisis. We're seeing that now. We talk about that with our seniors all the time. Why not have that home equity line of credit, the home equity conversion mortgage on hand, have that ready? Even if you don't take any money from it, if you've got the checkbook there that comes with it, you can get a hold of funds very, very simply. While our day-to-day emergencies are rarely so extreme, it's impossible to underestimate the value of having quick access to capital when it's needed. Every borrowing method comes with unique terms. That is how long you have to pay off the borrowed amount, at what interest rate, and any other special conditions that may affect your payments. For example, mortgage terms may include a repayment period of 15 years or less, all the way up to 50 years, 50. Such loans may also feature a fixed interest rate for the duration or a variable interest rate that adjusts yearly after an initial locked-in period. The terms affect how much your monthly payments are and how long it will take to pay off the loan. For example, with a 15-year mortgage, you'll incur less than half the interest charges you would with a 30-year mortgage. However, your monthly payments will be significantly higher. Total cost, even if a loan has low monthly payments, it's not necessarily a winner if the total cost is high. The example, let's see how these criteria can help us choose between credit cards and personal loans. Personal loans work for you. A personal loan is a form of borrowing. in which the borrower receives the loan amount in full and must make fixed payments, including principal and interest owed for a specific term, usually a few years. Unlike credit cards or lines of credit, if more money is needed, the borrower must reapply or complete a new loan application. Allowing interest to accrue can quickly lead to debt that spirals out of control. Some common uses for personal loans: debt consolidation, home renovations, weddings, vacations. The main advantages of personal loans, one of the big advantages of a personal loan is that you don't have to put up collateral such as a house or car in order to get one. These are called unsecured personal loans. Interest rates on unsecured loans tend to be higher than those for secured ones because of risk. Since the banks have few options if you stop making payments, the risk is higher for the lending institution, so they charge more for that. Interest is basically a cost of funds and a cost of risk. Those are the things that go into interest. If you have a secured personal loan and fail to make payments, the bank repossesses the collateral you put up. That could be your car, that could be your home. It varies. Another advantage is that you can use a personal loan for almost anything. Pretty much the only things you can't use a personal loan for are investing, gambling, and educational expenses. Now, of course, that doesn't mean that just because you can use a personal loan to throw a party for all of your friends, you should. But in principle, you could. But in principle, this sort of flexibility is quite advantageous. The drawbacks of the personal loan. Of course, despite all these advantages, personal loans have their drawbacks as well. In general, personal loans have higher interest rates than equivalent home equity, business, and auto loans. Though if your credit is good and you apply for a secured personal loan, one with collateral, it is possible to get similar good interest rates. Another potential disadvantage is that personal loans are a one-time fixed amount transaction. If something else comes up and you need additional funds, you have to apply for a whole new loan. In fact, according to the Federal Reserve Bank of Boston survey of consumer payment choice published in 2011, 72.2% of consumers have a credit card payment. Have a credit card. The average consumer who uses any sort of payment cards has an average of 3.7 cards. So what we're really doing is we transition now into how credit card debt works. There's a lot more pros and cons to each of them. We're going to go through these more in depth throughout the day today. So 72.2% of us have credit cards, and we have on average 3.7 of them. And with all plastic floating around, where do we end up using the credit cards most? Yep, online shopping, daily expenses, travel, and emergency expenses. Essentially, we use credit cards as a replacement of both cash and checks. Do you even remember checks? I know I spoke recently with some young people and asked them, how many checks do you write a year? And most of them, the comment was, they don't even know how to write a check. Do schools teach anything about writing checks now? Do schools teach anything about balancing a checkbook? Do schools teach anything about using a credit card and reconciling your credit card statement? Yeah, they know how to use the credit card, but they're not teaching any of our young people anything about finance. Remember the old, I'm not sure. I see that Chad, you're online, Robin, you're online. You probably remember the days in past when we had what they called home economics. Home economics. And we carried around with us this little accordion folder. We wrote checks to pay our bills. It was a hypothetical bill payment system. Do you remember those things? Do you remember those days when we did that? And we actually had to balance our checkbook in school so we can see what the money was, where we were spending our money, how we were using it. We had to balance our credit card statements if we were using that. We had to pay utility bills, car bills, all these different bills. Do you remember those days? Our kids don't do that anymore. They don't teach them that. They've got that stupid test they're teaching them so they understand how to pass a stupid test, so that way they understand what the Roman Empire was. Now, how many of the kids are going to use are needing that knowledge of the Roman Empire? Right? They don't have that situation. They need to understand financial or fiscal responsibility. But you know something? We don't teach fiscal responsibility to our kids. And then we wonder, why is it that they have so much credit card debt? Why is it that there's trillions of dollars in student loan debt? Why is it that we're talking about retirement issues? Well, our kids aren't getting there. Why is it that we have to worry about our young people not having $1,000 in the bank in case their car breaks down or need new tires? Well, we failed them as a society. Our schools aren't teaching this. Do they even have an elective in the schools for these type of things? And we talk all the time about buying new houses. Yeah, Brian, you're right. In the 70s they did that. Exactly. It should be being done in the 2010s, 2020s. Our kids still need it. It is basics. So advantages of the credit card, the main advantage of the credit card is convenience. Not having to carry around cash or write checks. Plus, credit cards enable us to make purchases even if we don't have the money yet. Oh, okay, so the credit card allows us to be fiscally irresponsible. If you need to buy a replacement window or payday is a week away and you won't be stuck feeling a cool evening breeze because the window broke, you can use a credit card. Why? Because you don't have the cash for it. Try using a debit card for the next 30 days and see what happens. Credit cards allow us to spend up to the credit limit to be paid off at some later date. That's another advantage. Payments are due monthly with a specific minimum requirement of 1 to 3% of the total credit card balance. This means that if some emergency arises that prevents you from paying off the full balance, you can shift payment to a later date by paying just the minimum required. Remember, to get your maximum credit score, what you really want to do is pay as much as you can before the statement due date, and then just pay a minimum amount before the statement payment due date. You got two different dates on your credit card statements, the statement closing date and the payment due date. You want to pay as much as you can before the closing date, minimum payment before the due date. That way you're always in compliance, but you get the best benefits for your credit scoring system, the FICO score. And again, the FICO score does not matter. It is the FICO score. Chad, you're causing trouble there, buddy. Yes, the schools are too busy dividing genders and race. And home economics not on the radar. You're right. Credit card disadvantages. If you don't pay off your balance, then you're going to be exploring the world of credit card disadvantages, looking for a better credit card. There's a lot of facts on that. We'll share those with you. Credit card interest rates are typically high. 15% is a common rate, and in certain extreme cases, interest can be nearly 80%, 80. Since payments are due monthly and are based on accruing balance, they become harder to pay as time goes on. Because of this, credit card debt can be difficult to manage, according to the G19 credit card report by the Federal Reserve. The average American household in May 2016 owed $7,814. And Robin, you're right. There are apps for this. On the 8th of September, I would think it's a week from Friday, Chris Bissonette is going to be in with us, and he's going to share a great app that will allow us to connect our credit cards and bank statements all together. You go to the one app, and it manages everything for you. Chris Bissonette. Be sure to mark that on your calendar. September 8th, he's going to be in with us. We'll share that. We're going to give that app away for free to everybody. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, more about the personal loan versus credit card. Don't disqualify yourself from buying a house because of FICO misunderstanding. We'll talk about the scores that you really need. And 4 things millennials need to worry about with regard to retirement. It's not even on their radar. You can reach us anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio, on Twitter, @Ron Siegel. And if you miss any part of our broadcast, Ron Siegel 1, Ron Siegel, the numeral 1 on YouTube. Subscribe there and get any of our replays right there. Stay tuned. We'll be back in just a few along our flagship station and all across the country on our other great stations.
Siegel
Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.85%, that payment could support a $416,000 mortgage. But if you wait and rates tick up to around 6.5%, which is roughly the average home mortgage rate over the past 30 years, that same $1,900 mortgage payment, including principal and interest, may only be able to support a $314,000 mortgage. That's over $100,000 worth of home you're missing out on by waiting. That's buying power. All you need to do to get started is reach out to the Siegel Lending Team at 800-306-1990. That's 800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Payment example excludes taxes and insurance. Call us for full details, 800-306-1990. That's 800-306-1990 or SiegelLendingTeam.com. Equal housing lender, licensed under NMLS number 217037.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel Lending Team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel Lending Team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel Lending Team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
Homeowners that are 62 and older are about to find out a great way to live a better retirement. It's called a reverse mortgage, and SLT can help you learn more. Call the Siegel Lending Team at 800-306-1990 right now to receive your free booklet with no obligation. It answers questions like how a reverse mortgage works, how much you qualify for, the ways to receive your money, and more. When you call the experts at Siegel Lending Team today, you'll learn the benefits of a government-insured reverse mortgage, how it will eliminate your monthly mortgage payments, and give you tax-free cash from the equity in your home. Here's the best part. You still own your home. Now is the best time to take control of your retirement. Call 800-306-1990. That's 800-306-1990 to get your free brochure. Call today or visit our website at SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or simply call 800-306-1990.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, as well as that's my message. And I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area-trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, to 79564. Find your dream home before someone else does. Text NEST, N-E-S-T, to 79564. Find your dream home before someone else does. Don't disqualify yourself. That is the subject of today's real-time real estate segment. Don't disqualify yourself from home ownership. 52% of approved home loans have a FICO score under 750. Under 750. A lot of people don't want to understand that. The results of countless studies have shown that potential home buyers and even current homeowners have an inflated view of what is really required to qualify for a mortgage in today's market. One study by the Wharton School of Business at the University of Pennsylvania revealed that many millennials have not yet considered purchasing homes simply because they don't believe they can qualify for a mortgage. A recent article about millennials by Realtor.com explained that about 72% of aspiring millennials said they're waiting because they can't afford to buy. 72%. The article also explained that 29% of millennials believe their credit scores are too low to buy. The problem here is the fact they think they'll be denied a mortgage is keeping them from even attempting to apply. Ellie Mae's vice president, Jonas Moe, encouraged buyers to know their options before assuming they won't qualify for a mortgage. And I quote, many potential home buyers are disqualifying themselves. You don't need a 750 FICO score and a 20% down payment to buy, unquote. So, what's the credit score is necessary? What credit score is necessary? I posted a chart earlier today. I'll post it again later this afternoon so it gets into your Facebook and social media feeds. But FICO scores, 0.5% of the people have a FICO score of under 600 and they still got a loan. Under 600, still got a loan. 52.2% are from 600 to 750. 600 to 750. You do not need to have stellar credit. Now, does it help to have better? The better your credit is, the more it helps. So that's why we want you to get a hold of some of the people. But the issue becomes we want to have great scores. We want to have the best score possible. And since every credit report is wrong, every one of them, that's my opinion, that's my experience. I've been looking at credit reports for decades. Heck, it goes back into the last century. I sound old, don't I? But I've never seen one that's completely accurate. And that's the issue. So you need to get them correct. And I'm not saying to misguide people. I'm not saying any of that right there. I'm saying get the credit scores correct. If owning a home of your own has always been your dream and you're ready and willing to buy, or if you are a homeowner who wants to move up, find out if you're able to. Let's get together. Let's talk about what is in your best interest. Now, I share that because I don't believe you ever need to be turning somebody down for a home loan. Now, there are times what we have to do is say, let's get on a game plan for a new home. That's the issue. There's a big difference between turning somebody down and getting on a game plan. Because maybe you're not ready to buy right now. Maybe you need to save some money for the down payment. Maybe you need to go through the process of getting your credit score corrected. And there might be some opportunities in there where you can increase your credit score by strategically doing certain-ish items. Strategically. What does that mean? And again, I never ever profess the idea of doing something that's illegal or immoral. But I will say that I've seen people who simply don't have enough items on their credit report, so they need to go out and get some new items on their credit report, let those season for 3 to 6 months, and watch what happens to their credit score. Helped a young couple buy their first home, and the wife, in this particular case, her credit score is like 660. There was nothing wrong on her credit report. The fact was that there was nothing on her credit report. So getting her set up strategically with a few different things, in about 3 months, she had a credit score that was a 780. Wow. And that's very simple to do when you understand strategically what needs to be done. Now, in some instances, it's a matter that there's errors on the credit report. Some people that have very, very common names, they're going to have situations in their case where maybe there's a mixed report. John Smith, Bob Jones, there's all kinds of them. Juniors, seniors. They end up having multiple items on the credit report. Again, those are just errors that need to be corrected. And once they're corrected, all of a sudden, watch what happens. The credit scores jump. They skyrocket. Now, you have to watch it all the time, because especially when you're dealing with some of them where you're dealing with that issue where you've got a mixed report. Well, what does a mixed report mean? It means they got the same names for people. Do you think that went away? No, so those type issues can come back again. That's why, just like checking your bank statement, just like checking your 401k statement, you need to be checking your credit report at least once or twice a year. I suggest twice. There's a great resource, creditcheck.com. creditchecktotal.com. Creditchecktotal.com. $1 for the first month, and you can get your true FICO scores. And I have so many people that call me and tell me, Ron, I've got an 860 FICO. And I said, no, I'm sorry, but you're looking at a FACO. Why? Well, because FICO scores go to 850. And the best I've ever seen was a man with $23 million in assets, and he had an 834. So when you talk about a FICO score that's above 850, that means it's a credit score, maybe a Vantage score. It's not a true FICO score. Those are just some of the issues. We'll talk more about those. We were talking earlier about the difference between personal loan and credit cards. And yes, Brian, we do have HELOCs, home equity lines of credit. Those are a specialized product. I'll talk about that a little bit when we come back. The home equity line of credit and how that fits in, and who's going to use that, when it's going to be used, what the best usages are. Because I'm not one that says that there are bad loans. There are bad applications of loans. So we'll talk about that HELOC. I'll make a note of that to chat about it when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. We'll also talk about things millennials need to worry about, and they're not even on their radar for retirement. All that and more. You can reach us anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio. On Twitter, @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Most businesses struggle to get the online reviews they need to get a competitive edge over their competition. Rex is a brand new technology that uses text messages to direct happy clients to your online review sites, Zillow, Google, Facebook, and Yelp, and unhappy clients to a private survey, so businesses can win more customers. Try Rex today by going to www.meetrex.com.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com or 1-800-306-1990. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
Do you have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? The mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel Team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to reap@ronsiegelradio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Rate subject to change and without notice. Licensed by the California DOC and BRENMLS 217037 and 145502 and Cal BRE 01869452 and 1866775.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Word on Wealth segment today is being brought to you by the VIP Hero Program. That is for our teachers, first responders, active retired reserve military, law enforcement, firefighters. There's discounts for all of them. VIPHeroProgram.com. See if you qualify. $25,000, $10,000, $20,000, $25,000 in discounts if you're one of those special groups of individuals. Got them for you there. Just go ahead and check it out. Millennials, they need to worry about four additional items. They don't even talk about a lot of these things in many circles. About some items that the millennials need to think about with regard to retirement. And again, like I say, most places they're not even on the radar. Some millennials are thinking about retirement, about what they've talked about these short and long-term goals that everyone should be focused on. That should understand what those short and long-term goals are. Everybody's goals are different. But millennials need to worry about these four things in addition to saving for retirement. And it's not about stashing money away however much you think you'll need to keep up your lifestyle. It includes planning for the unknown. Unfortunately, a lot is unknown. For millennials, that includes if they'll receive Social Security or Medicare benefits, if they'll need to help their aging parents, and how their retirement funds are managed. The need for millennials to save for retirement as early as possible is even greater now. More than half, 52% of millennials guessed how much they would need in retirement, according to a 2014 Transamerica Center report. And only 1 in 10 used a calculator or spreadsheet. Millennials are in a tough spot. They have more student debt than any generation before them. They earn less money than the generations before them did at their age. And they're in a sandwich generation where they're likely going to have to support themselves alongside their parents and their children. Millennials are also not very optimistic about their retirement. 64% of respondents in a Wells Fargo survey of more than 1,000 millennials said they would never accumulate $1 million in savings over their lifetime. They also expect to work until they're 90, according to a video by research firm Morningstar. The good news: it's never too early to save, and the quicker a millennial begins, the better their chances of being comfortable in retirement. Experts suggest starting with whatever they can muster, even as little as $5 every month. The benefits of doing such a small amount will add up with compound interest, but doing so also forms a habit of putting away money consistently. And the next time they get a raise or a little extra money, they should continue to add more to their savings. Overall, despite the financial hurdles, millennials are confident in how they save. Still, it never hurts to be overly cautious, and that includes saving more or planning for one of the following four situations. What if you don't get Social Security? Millennials aren't all that confident they'll receive Social Security benefits in the future. According to a recent Investopedia survey, 19% said they felt confident, whereas 81% were not confident. Right now, there's a lot of debate about what to do with Social Security program, which can start for people as early as 62 years old. Receive full benefits. You have to wait till 66 or 67. It just depends on the individual. What if you have to take care of your aging parents? More than a third of Americans believe they will help their parents financially in the next 7 years, according to the Society of Grown-Ups, an online financial advice group. One 21-year-old Reddit user is already planning to get started helping her parents with their retirement because they always supported her and were paying down a mortgage. Experts suggested showing the parents how to open a health savings account as an investment for portfolio, as well as saving for medical expenses. They also suggested helping contribute to Roth IRAs and paying the taxes from an IRA to Roth IRA switch. Got to talk to the financial professionals about that. Unexpected health care costs, more than half. 60% of respondents over 50 years old said they were worried they would have to delay their retirement, possibly because of the impact of government policies or a lack of savings to cover health care costs, according to the Investopedia report. This can serve as a lesson for millennials. Health care costs might be dangerously underestimated. Today, a couple might need $350,000 to pay for most of their health care costs. Not everyone can afford their health care. More people have had trouble paying for their health insurance since 2015, according to the Kaiser Family Foundation, and they're putting off taking care of themselves. 20% of the public said they or a family member have delayed necessary health care because it was too expensive, with another 23% saying they skipped a medical test or treatment, and 21% did not fill a prescription. Your employer or advisor is mismanaging your retirement funds. Why are they managing your retirement funds? You should be on top of that in all situations. Again, Chris Bissonette, September 8th, he'll be here. He'll evaluate what you're doing, give you ideas there, and help you with the changes that they recommend. Just a thought for you. That is the Word on Wealth segment, again, brought to you by the VIP Hero program. So, Brian, you brought a great question up about HELOCs. And yes, we do offer HELOCs, home equity line of credit. And how does that fit in with our discussion today of the personal loan or a credit card? Well, the home equity line of credit is the secured version of that personal loan that we talked about. So it's not an unsecured personal loan. It is a personal loan secured by your real estate. Do you need them? Well, there's two schools of thought there. Some folks want to say, okay, I like the idea of that home equity line of credit. Even if you don't need it, get it in place so that you've got emergency funds available. The problem with that, and the reason I do not like that, especially for seniors, I'd rather see you get a reverse mortgage, the home equity conversion mortgage, if you've got significant equity in your property. Now, in order to do a home equity line of credit, the HELOC, you have to have equity in your property because that's what the security instrument is. Do you have to have a lot of equity? No. You don't have to have nearly as much equity as you do on the reverse mortgage. Now, the interest rate is going to be variable in most cases on the HELOC. Generally, they're going to have a 10-year draw period. So you're basically paying interest at that time and whatever you want toward principal. You don't necessarily have to make a principal payment. But if you do, you can then take it the next month and use it again. But you're only paying interest on the amount used, not on the full amount of the line of credit. The next step to that then becomes what happens after that 10-year draw period. Then you have what they call a recast. And the loan is going to go where you cannot take any more draws unless you refinance it or rewrite that loan. And then it's going, but if you don't rewrite it, then you go into that recast period. And generally, they're going to have a 15 or 20-year repayment period. So they're going to take whatever you owe, and it's still going to be a variable rate, but you're going to have to amortize the remaining balance over 15 or 20 years. That sometimes puts a hardship on people. But it's great to have them available. Now, the other issue, the big contrast, is the home equity line of credit. Generally, they set that amount of the home equity line of credit, and they don't generally change that for the better. But they do have options in there where they can reduce the amount of that line of credit at structured dates. So you have to really, really be careful of that scenario because it could be detrimental. You could be at a point where you really need that money, yet it's not there because they change the amount on you. And sometimes they do that without your knowledge. So they'll send you a note out and you're getting zillions. I shouldn't say not without your knowledge because you were really told about it, but you didn't pay attention. They sent you a note. They send you all these different papers all the time, and you may get complacent and not read all of them. And when you get complacent and don't read them, they might have said, well, your line of credit was dropped from, say, $100,000 to $50,000 or $25,000. Can be an economic situation. They might have looked at your credit report and your scores aren't where they were, maybe due to no fault of your own. Maybe they look and say property values are not appreciating the way they expected. Maybe you're just not using it and they have those funds tied down. See, if you have a home equity line of credit and you don't use it, the bank has to set aside funds in their reserves just in case you use it. So it ends up costing them money even if you're not using that home equity line of credit. So they don't want to do that. So they may end up reducing your amount of funds available. I know it doesn't sound pleasant, but that's the reality of what happens. On the reverse mortgage, your line of credit is going to grow with the reverse mortgage every year. That's part of the FHA program. You're paying for that service. You never lose your home in that program unless you don't pay your property taxes or your insurance. So those are just some of the differences. Those are some of the benefits. So yes, the home equity line of credit does have a place. It is a good program. It is a good product. Again, it's just for the right person at the right time. And we appreciate you watching. I hope that answered your question there, Brian. And I thank you all for participating in our broadcast right there on our Facebook page. And we hope that you'll set that first radio preset button to come back here every day to join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Steve, who's engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money, help a lot of people, have a lot of fun, have a great day. We'll talk to you next time on Ron Siegel Radio.